this is sort of a generational buy the dip opportunity because
crypto specifically, though, 6 weeks after hitting a record high, has plummeted. Altcoin Daily's Austin Arnold is here to get us up to date on what's going on and what, if anything, people should be doing during this time. Thank you so much for your time.
Thank you for having me. Love Chicago. And if I could just start out, Altcoin Daily speaks to an audience of 3.5 million across all social platforms, on X, on YouTube, and we get this question all the time. Why is Bitcoin dipping? And to me, this is sort of a generational buy the dip opportunity because Bitcoin is dipping due to many, many macro factors that have nothing to do with the underlying fundamental technology. In fact, I would argue Bitcoin, compared to 5 years ago, is 5-10x fundamentally better, the fundamentals, yet Bitcoin's dipping due to a variety of macro factors like AI bubble scares that's dipping all markets, as well as a liquidity crunch brought by the government shutdown.
Very interesting. So there is a lot behind the numbers.
There is. And if anything, I would encourage, the Altcoin Daily audience knows crypto investors understand we want that volatility. They're in it for the long term. I would call this a generational buying opportunity if you're a long-term investor, because year to date, 11 months, Bitcoin has sort of kept pace. But if we go back 13 months, 14 months, Bitcoin has been one of the best performing assets in the global economy. If we go back 2 years, if we go back 5 years, Bitcoin is always one of the best performing assets long term. That's due to its finite supply and continued adoption. And if anything, I would call this Bitcoin and crypto's 1996 moment.
Oh, interesting.
Meaning for the internet. It is very interesting. The internet, for the first time ever, really hit its stride and really got regulated in 1996 due to something called the Telecommunications Act that opened up the path for fair and known regulation to happen for the internet. The biggest piece of cryptocurrency regulation is happening in the next few months. It's called the Market Structure Bill, Clarity Act, and that's going to regulate the cryptocurrency industry for the very first time. And for perspective, cryptocurrency has grown for the last 15 years, been one of the best performers when it was a scourge on traditional finance. Now, for the first time ever, just like 1996, the largest financial economy in the world, the United States, is regulating it, and thus long-term fundamentals only improving.
When people talk about a bear market and how crypto fits into that right now, can you explain that?
Absolutely. Bear market means price goes down for an extended period of time. Bull market means price goes up for an extended period of time. The cool thing about investing in cryptocurrency is that, again, a 5% to 20% dip in traditional markets, people lose their mind. In cryptocurrency, that's common. People invest for the volatility. Right now, the Bitcoin price is ranging between 100K and I'd say 70K, which is right around where the price was when we had our last elections last year. Range bound until then, and whether it's a bull or bear market, long-term investors have always done well.
When I was reading up, getting ready to speak to you, I kept seeing some comments about a flash crash on October 10th. What was that?
100%. I'm glad you brought that up. That was sort of the catalyst for why the cryptocurrency market led the drawdown that we're seeing in all the broader markets. In cryptocurrency and in all markets, there's leverage trading, people trading on margin. Traders exist in all markets. We had something called a leverage flush out, which were all those traders, the majority of them that were long on the market, got flushed out and they were forced to liquidate. As a long-term investor, that makes me feel good knowing that the Bitcoin price initially didn't go down because anything fundamentally changed. It's just that there was forced liquidations, meaning there's forced sellers in a very short amount of time. That happened on October 10th. And then, of course, the market has been chop-solidating, working the confidence back in and working its way out since then.
So would a turnaround be beneficial if you're looking for volatility?
Investors love a turnaround. Like I said, that's, in a long-term perspective, people understand that it's going to go up and down in the short term. I think anything above $70,000 is very normal with Bitcoin, considering we were just there about 11 months ago, 12 months ago. right now, the 50-week moving average, if we're going to get technical, my worst case scenario right now, that's in bear markets, Bitcoin usually always returns to the 200-week moving average. And since we just crossed under the 50-week moving average, the 200-week moving average is around a $55,000 to $60,000 Bitcoin. Worst case scenario, we could always dip more towards then. That's if the broader global markets, traditional stock market, NASDAQ, if we're all about to enter a global bear market, that's my worst case scenario.
What would we or you be looking for to signal a turnaround?
A turnaround, I think there's three big catalysts to me that tell me long-term cryptocurrency is not going away. In fact, cryptocurrency is getting bigger. Number one, like I said, huge piece of legislation, the biggest crypto legislation that we've ever seen, market structure bill, that's expected to get passed by earliest December or early next year is the expectation. That's catalyst number one. Catalyst number two is something we actually have already seen. It's called the Genius Act. That's already happened a few months ago, still very new, that regulated stablecoins. For the folks at home, a stablecoin is just a digital dollar pegged one-to-one. And what we saw weeks after stablecoins finally got regulated, we saw JP Morgan, Citibank, MasterCard, Visa all say we're going to roll out stablecoin pilots for customer transactions. Why they like it? Because it's cheaper, faster, more instant settlement. And all that's being built on other cryptocurrencies besides Bitcoin, like Ethereum and Solana primarily. So again, we are in the very early innings of this. That was catalyst number two. And then for the turnaround, I think we're going to continue to see governments and central banks globally adopting and accumulating this technology. For example, Luxembourg, the central bank, the government just allocated 1% of their sovereign wealth fund into Bitcoin. Their exact quote is, "We will hold for the long term."
Wow.
That's a 1%. The Czech central bank just announced a Bitcoin allocation. They're buying Bitcoin. And of course, the United States government has announced a Bitcoin strategic reserve. So all those factors, I think, is going to be the upbid for Bitcoin specifically in the long term.
Is there anything else that's up and coming that would have a significant impact on Bitcoin or cryptocurrency?
I think the number one thing people should focus on is Bitcoin, just because it is digital gold. And in a world where inflation's never going to end, they're never going to stop printing money, the debt is uncontrollable. How do we get out of that? They're going to be forced to print. You want a digital store of value like Bitcoin. If we're looking at other things, I think the stablecoin narrative is something that's being adopted by central banks and financial behemoths globally, and that's being built on Ethereum and Solana.
If someone is totally, like I don't know what these kids are talking about. I'm not even trying to. How do you get them on board? What do you say to someone who is fundamentally against cryptocurrency and Bitcoin? How do you get them to be a believer?
I think I would focus on the people that are interested, because I think it's, number one, sort of a generational thing. The older generation loves gold. The younger generation, only growing up in the digital age, wants a digital store of value. They like digital currency. I would say right now, companies like Coinbase, other big blue chip crypto companies in the S&P 500, meaning a lot of those people that don't even necessarily know crypto, they're forced to invest in crypto companies if they're in indexes like the S&P 500. I think the biggest thing is, what is the solution for the global fiscal irresponsibility of central banks and governments everywhere? You need a store of value. I think we're going to start to see hard assets take up more, absorb more of that inflation. And I think you got to ask yourself, do you think the world is getting more digital in the next 10 plus years or less digital? I personally think the world is getting more digital, and that means a digital store of value is not going away. In fact, it's only getting more relevant.
All right, and what are some best practices? I'll leave us on a note of what are the best practices if you are looking to jump in?
Oh man, this is something, great question. We talk about this on Altcoin Daily, which again, you can find on X, on YouTube, global audience, although we love Chicago and the Midwest. I'm from the Midwest. I would say two things. Never invest more than you're willing to lose. This is an incredibly volatile market, which means you're gonna have to be a long-term investor and weather that volatility, so understand what you're getting into. And number two, and this is something that I still have to remind myself regularly, is take emotion out of investing. if you've done the homework and you have an investor's thesis on where you think it'll be, years from now, then you like dips like this. They're buying opportunities and understand where the market, the story, the narrative is going, 1 to 4 years from now, 10 years from now. That's what I look at.
Wow. All right. A lot to wrap our brains around right now. Thank you so much. I appreciate it, Austin.
Appreciate you.
Okay, take care. It's just about 3:15, everyone. Let's take a quick break.